specific, but more towards the financials. Next week we kick off the first quarter of 2014 earnings season with Alcoa reporting, and the fact of the matter is S&P 500 earnings are expected to grow by less than half of 1%. It's probably going to be the slowest quarter in many quarters for earnings growth. Of the 10 S&P 500 sectors, the sector with the worst earnings growth is the energy sector. First quarter numbers are expected to show a negative 5.2% growth. That will mark the fourth consecutive negative growth for the sector going back to second quarter 2013. That's in fact impacting the sector in terms of deal activity, as we'll see as we go ahead.
Of the 97 issuers in the E&P space, about 75% are in speculative grade territory. 56% are in the single B category. Generally, this points to the small size and scale of reserves and production of many of the names in the E&P space. Typically, the B category names have under a trillion cubic feet equivalent, or TCFE, of reserves. In other cases, the profitability is expected to remain weak, for instance, for those names that are tied to natural gas prices. For others, it speaks to reserve replacement risk, especially for companies operating in the Gulf of Mexico, where reserve life is short and where the wells depleted at a very quick pace.
So, certainly, rail, it's a growing answer to the transportation problem and to some of the restrictions that we're seeing out of some of these regions. There's a lot of question about how this market balances if we can't get the northern part of Keystone built. Do you move gas, or do you move crude oil over on TransCanada, or do you continue to expand rail? I think John's absolutely right. The industry is very terrified of another large accident, but right now that seems to be the Band-Aid solution.
So I think one of the best evidences of diversification, besides any correlation numbers, which I'll show you later anyways, but only 4 times since 1970 were the S&P 500 and the S&P GSCI and Dow Jones UBS down at the same time in the same year. And that was 1981 in the recession, 2001 after the tech bubble burst, and then 2008 and 2011 after the global financial crisis. Also, on average, when the S&P 500 is down, it dropped about 14.5%. In those years, the Dow Jones UBS was up 98 basis points, and the S&P GSCI was up 125 basis points. So it really has provided portfolio protection when the stock market has been down to have an energy exposure.
I think that the industry has gotten so good at generating production from these shale wells, particularly in natural gas, that it became too much of a good thing, and that's why you've increasingly seen a lot of these producers shift over to the liquid side, where your EBIT margins are generally much better. I think that's something that we're going to see the industry continue to do, continue to focus on the major liquids plays like the Eagle Ford or the Permian or the Bakken. So those are some of the things that I think are early days and still likely to stick around for a while.
About 3 or 4 years ago, Mr. Medvedev, not the one who was the president, the one who was the president of Gazprom, made a comment at some meeting about, fracking can ruin your water supply, and he goes on and on. He sounded like Sean Lennon, and I thought, this is really significant, because this shows he's scared of this. So even though the lead time is, as Charles said, it's very long, and it's not going to make any impact now, and it's certainly not going to win back Crimea for Ukraine, but you could see like the long-term view that they were taking just a few years ago was that this was a real risk. And when I saw that statement, I thought that shows the perspective, the long-term perspective that he has, and they are nervous.